Hi, I'm back with my second video. In the last video, I covered different standards of value and premises of valuation. I also talked about different reasons for doing valuation. Today, I'm going to talk about the approaches. Now, the three main approaches to valuation, however, the number of methods in each of these approaches are numerous. Let's start with the first approach, that's income-based approach, popularly known as discounted cash flow approach. Under discounted cash flow approach, we consider the cash flows as the main basis for valuation. For that, we need to estimate revenues and then the income streams of the company. The popular methods under this approach are free cash flow to firm, free cash flow to equity, adjusted present value method, dividend discount method, and market value added method. The second approach is market-based approach, also known as relative valuation approach. This approach uses multiples of comparable companies, and these multiples, like the examples are price to earning multiple, enterprise value to EBITDA multiple, enterprise value to sales multiple, price to book value, or price to sales. There are many such multiples. Another method under relative valuation is transaction multiple approach, which takes into account the recent past transaction multiples. The third approach is asset approach. The analyst often must choose between valuing just intangible assets or as an individual asset or intangible assets collectively. So various methodologies exist for each one of these choices. According to experts, all three approaches should be considered for doing valuation of companies. However, it is not common to use all the three approaches in each valuation. For example, the asset approach is used less often in valuing operating companies since the time and cost involved in performing valuations of intangibles do not warrant this. There is another approach which is less often used. This is called real options valuation. Now, this approach is used where it is difficult to estimate the cash flows as the uncertainty involved is quite high in some cases like oil exploration, minings, developing patents, drugs, etc. All of these approaches are used for valuing established companies where either future cash flows can be easily estimated or the business is getting liquidated, and there we can use asset valuation method easily. How about the startups? For startups, there are some other methods used. So venture capitalists, private equity, and angel investors, they use different methods like first Chicago method or venture capital method. Now, these methods are focused more on the terminal value or the exit value calculations. So there will be separate videos where these methods will be discussed in detail. In case of seed staged, idea staged, or startup businesses which are at pre-revenue stage, it is difficult to use any of the approaches. A lot of times when I deal with startups, the founders of the team ask me how to develop financial projections. For such businesses, there are other methods which do not require estimation of cash flows. So example of these methods are Dave Burker's method or scorecard. There are others. If you want to continue to learn more about these methods and want to learn how to practically use these methods for doing corporate valuation, then contact me personally or subscribe to Nishwin Consulting on YouTube. We are committed to elevating potential of executives and companies.